everybody. Welcome to your Tuesday edition. Happy Tuesday. Hope you had a great trading session out there. Some nice downside moves for some of these equity market individual ones today. Some Boeing one in particular we'll look at. Nice downside move. Anyway, I wanted to give a shout out to the viewers that sending a bunch of questions. I have a whole bunch to go over. However, I wanted to go into the question for Les to start the program on kind of what I'm thinking about when I'm selling puts, what's the scanning process, what am I looking for, how am I picking it, but my option screener for some reason is still not working. So I'm working on a fix for that, Les, not trying to avoid your questions, but I will, I'm hoping to do that on Thursday. Hopefully I'll get that, I may title it, the 1% a month strategy, because it's kind of what this one portfolio that I'm managing, that's the goal of this portfolio by selling options. So I'm going to try to combine those two things under that topic, and I'll get to all that, and hopefully this will be fixed by then. If not, I'll use Thinkorswim, which I'm not a big user of, but we'll get a different option chain out there and hopefully get that show for you. So that said, hello Siraj and Tom, Big Eb, Jerry, Tibor, Thomasina, Shadow, and of course Les down in Cape Canaveral. Good to have you guys with us. Today I'm going to really go into a bunch of questions from one individual and maybe get into one other one along the way. But I have to do an abbreviated show today. I know, Big Eb, we're going to keep it at 30 minutes because I have a presentation I'm supposed to give for the Seattle Online Trading Academy starting at 3 o'clock, and I need to, I got a bunch of prep to do. Les, it's because most of my options trading money is sitting in the TradeStation's account. I have some money at Thinkorswim, but only a few grand, so not enough to really be dangerous with. So most of my heavy activity is done on the TradeStation platform. Okay. I'll try to use Thinkorswim. All right, here's the questions. Bob E. sent in one email actually, but it had a whole bunch of questions to it. There were actually 3 pieces, and I thought they were diverse enough. It was an interesting topic. I figured it would be entertaining for today's show. So let's start with that. Of course, I will do my best to get to whatever listener questions you guys have, but I'm going to try to do a hard stop in 28 minutes just so I can get my presentation ready for the Seattle Online Trading Academy group. All right. So first part of this was pretty simple. He says, you said you sold all your rental property. Can you please elaborate on why, taking advantage of a seller's market? Don't you need the write-offs? Well, a couple different factors there. And luckily, and thanks to my father, I've been involved in real estate for quite some time. I had some rental properties many, many moons ago in Austin, Texas. Subsequently sold those. I bought some land with that, and then I also had a rental property in Northern California, and I had another rental property in Texas, and the timing is part of it. So, for example, the property in Northern California, there was a huge fire a few years back, and what that did is that really burned down a lot of the homes up there. Thousands of homes were destroyed. So instantly, my property value soared. I got basically $100,000 extra just for selling at that time. And I thought about it, it's just a rental property. It needs a ton of work. It's pretty beat up. That was a market timing piece, a perfect timing piece. So that was one reason, was market timing, taking advantage of not only a seller's market, but like the perfect timing because of the fires and what it did to demand up there, right? Supply dropped, demand increased, obviously prices spiked. Good news for me is the price of the house that I sold is just kind of dropping down in value now. So I feel bad for the guy who bought it, but I hope he enjoys his home. Now the one in Austin, Texas, that was different. I had some trade ideas that I wanted to work on and a couple other things I wanted to purchase. So I ended up selling that property in Austin, Texas. Because it was going up, but not at the trajectory that I wanted. It was kind of flatline. I had it where it was break-even cash flow, so I wasn't really making positive cash flow on it. And I thought, you know what? I'll just dump that one. And that one I regret because that thing, the property value has just skyrocketed since I sold that one. I mean, it's up well over double. I can't remember exactly when I got it. I want to say 2016, 17. What year is it now? Yeah, probably 3 or 4 years ago. Man, that thing has just soared in value. So certainly there is the write-offs aspect to it, Bob, but it was, for me, more market timing and kind of like if I was in investments, right? My NorCal one, that was the equivalent of watching something go parabolic and an unloading during that parabolic move, thinking that these parabolic moves usually don't last. The Texas ones were basically me getting out of something because it was going sideways, kind of like being in the Russell for the past 4 or 5 months, right? It was just kind of going sideways, and I went, I'm not making any money on it. I'm building equity in the home. I'm getting the write-offs, but I still think I could put my money to better use. So that was one of the reasons why I sold that one. And of course, that one I, in hindsight, made a mistake on, because for some reason Austin has now become one of the hottest real estate markets in the United States, thanks to all the mining operations moving there, to Tesla, and to the mass exodus from California and people moving to Austin, Texas. So that was question number one. Leslie, what happened to Brandon Wendell? Brandon is on tomorrow. He'll be on Wednesday. Big Eb says, Merlin, do you use 1031 exchanges for your real estate sales? Yes and no. So the Austin, Texas one, that was 1031 exchanges, right? So that's rolling into new property of equal or like value. The NorCal one, that was primary residence. It was kind of a gray area, but that wasn't subject to 1031 exchange. So I basically sold that one and took all the capital gains hits on that one. So, and it was kind of to clear the slate. There were some issues with that property, which I won't go into here, but the sale of that property was primarily due to market timing. Now, I like how you said you use 1031 exchanges. 1031 exchanges are awesome, and I highly encourage anybody who's in it to pay attention to 1031 exchanges, because obviously there are some great advantages. However, 1031 exchange is going to be for rental property. If you're doing something that's primary residence, you also have another huge benefit, and I'm not sure if that's global or just, I think it is national, not global, but national, where if you live in your home for 2 out of the last 5 years, you get a $250,000 capital gains exemption if you're single, and if you are married, it's a $500,000 exemption. So that's another key thing that people might want to pay attention to, is how long you live in your primary residence. At a certain point, that's a pretty significant savings there. Just think if you have a 30% tax bracket and you made $250,000 worth of capital gains on your property. If you lived in it for more than 2 out of 5 or 2 or 3 out of 5, I think it's 2, that's $250,000 would be tax exempt. That's $75,000 worth of taxes that you could potentially forego. So obviously, if you are into the real estate market and housing, knowing these numbers can have a huge impact on your decision-making process. All right, what else? So that was question number one from Bob, which is the real estate piece. Now, let me see what we have for a second one. This is, all right, I'll do it, Bob. I'm going to do it. This is for you, since it's Bobby's Q&A day. He says, you mentioned your worst trade ever was shorting Best Buy. Can you talk about some of your best short and long-term trades? More specifically, if they were just great targets you hit, or if they were trades you just let the profits run. I got to be honest, Bob, I've been doing this for so long, I can come up with a list of great trades for any one of those categories. I have some phenomenal winning trades long-term. I've got phenomenal winning trades short-term. I've got phenomenal losing trades long-term and short-term. So I don't know any that really stand out. I guess if I have to, let's see, can you talk about your best short and long-term trades? I would say probably one of my best short-term trades was the pandemic. Way back in February, and I should write the date down, but I believe it was February 19th. I had a guest on the program. We talked about how to protect your portfolio from the white swan event, or black swan event, where markets just go to hell in a handbasket and everyone's going, what the heck just happened? And ended up loading up a decent position with some put options on the S&P, and was rewarded 2 days later with just a colossal drop in the equity markets. That might have been probably one of my better short-term trades, meaning it was less than a week. I think I stayed in that trade for a week and a half before I ended up dumping it, and was just one of those, like literally that one trade made all of 2020 for me. It's just the nature of the beast, if you will, with regards to fast-moving black swan events. So that was probably my best short-term. Best long-term, oh man, that's a real tough one. I had some great trades years ago on oil where I just basically bought USO, which is strange, and just held it and did really well. I'm trying to think of any specific that stand out as long-term. I don't generally hold long-term, right? For me, long-term is probably a month or two is really starting to get long-term for me. So none of them that really stand out. Obviously, whatever I could say with cryptocurrencies, those were, but that was not based off of any technicals. That was just off of the concept of cryptos as a whole. So I would hold those much longer term. Now, this leads to a second part. So normally when I'm in these either bullish or bearish trades, whether I'm long or short, Bob, there are targets in place. And if you look back to probably my favorite short trade of all time was in 2008. And if you go to YouTube, you can type in my name and I think type in CNBC and it'll play a video of me with a much younger Merlin. And I was invited to be on CNBC in December of 2007. And I was in Singapore. So I was invited on there. It was great. Had an awesome time. And then they said, hey, we want you to come back on. You were great. So, awesome. I mean, this is what every trader dreams of, right? Being on CNBC as a regular. Let's do it. So they sent a limo down to Orange County, drove me up to LA. They asked me what I wanted to talk about. And I go, I don't really care what we talk about. I mean, it's your show. What do you want to talk about? And they're like, oh, well, let's talk about commodities. Let's talk about semiconductors. Let's talk about gold and S&P. I'm like, whatever you want, I can talk about it. Okay. So we went through the markets. I was supposed to do 2 segments for them. And at the end of the first segment, she asks me, it was Amanda Drury, who's, may as well call her Amanda Dreamy. She comes out and she's like, well, what are your thoughts on the S&P 500? And I had a full plan in place. I think I told you guys this. My plan was, if we got below a specific number, I'm going to start shorting that market and do it rather aggressively because it now would be 20% off the high of the S&P. And at the time, I believe it was 1576 was the peak of the S&P 500. And I basically said 20% off of 1576. That's 1260 on the S&P. 1260 is my number to go short the S&P 500. And it broke S&P. Well, what do you think I did? I was shorting, and I was actually going long inverse ETF. So I was long QID and SDS, which are double longs. So double short ETFs. So technically I was going long, but I was double short the market, which at the time worked out very good. Now, what's interesting is she asked me, what do you think about the S&P 500 on the show? And you guys can see the video. I'm not making it up. She says, where do you think it's going? I said, if we break 1260 on the S&P 500, I said, break out the bulldozers, we're going down in a big way. And I had little bulldozer cufflinks on. And she's like, oh, okay, the bulldozers. All right, let's talk about gold. And she immediately switched the subject, which I thought was interesting, because if I had a guest on this program, which I have had before, when somebody makes a call on the market that just makes you go, whoa, really? Like, okay, I'm all ears. Let me hear your argument, Your Honor. You'll plead your case. She immediately just skipped right over me, and it was kind of entertaining to watch how quickly she jumped that one. But, we went from 1260 all the way down to 666 on the S&P 500. Awesome. Now, to Bob's point here, I didn't write it down from 1260 all the way to 666, right? I started buying QID and SDS as it broke 1260, buying some more at 1200, buying some more at 1150. So I was scaling into a pretty sizable position in my portfolio. But it also was, here's some targets down below. So I was using historical market data to come up with a point where maybe I'll peel off some if it falls enough. Once it hit my second target on this, I just trail stopped the rest of it. And as you might remember, it got very volatile near the end of that. It was pretty entertaining watching this thing tank so much. Let me real quickly close. 1 second, guys. I want to close this. Someone's sending me a bunch of alerts. We're working on some crypto classes right now, so let me just end that so I start getting alerts from it. Okay, so Bob, that's it. I'll have to sit and think of anything specifically that jumps off the end of off the page at me. One intraday short-term long trade that actually was very enjoyable for me is I was teaching a class in Irvine, California. This has to be 2005 or 2006. And I was alerted to a stock that was moving pretty good. It was a penny stock, and God, I'm going to butcher the numbers here, but it was like $3 or $4 stock. Really one I normally didn't trade, and I found myself in a pretty sizable position of it. And this was before class started. Class started at 9. I think it was 9 in the morning. I think we started at 9 or 9:30. Let's call it 9. So I'm sitting there trading this thing at 6:30. It's putzing around in class, and I ended up selling this pretty large position just because I didn't want to be in the position during class. And I made a good chunk of change. It was several $1,000s profit, and of course we used that as kind of a talking point for the class that day, and went over the reasons why I bought it and where the breakouts that were happening and what was the justification. And then all of a sudden, one of the students goes, well, if you just held it, it's gone up like another $3. And I couldn't believe it. It's like, from when I got out, it went absolutely parabolic, and it was like one of the best learning lessons, because everybody in the class is saying, Merlin, you're a bad trader because you didn't leave that trade open. You would have made 4 or 5 times what you made. And I'm looking at it going, Well, I think I'm a good trader because I took my profit and moved on when I said I was going to. I told myself I'd be out of this trade by the time class started today. I did it. I followed my rules, so I'm not going to be angry at that. So it was a great learning lesson, but that was one of those short-term trades where in a period of under 2 hours, you're pulling in a significant, I believe that was a medium-sized 4-figure day. So that's fine for a couple hours. That's awesome. I wish I could do that every day. It doesn't always happen like that. So those are some of the more impressive ones. Normally they are based off of a supplier demand zone. I'm a breakout pattern trader. I love candlesticks, as you guys know. So it's interesting that you asked that question. I was kind of diving into it a little bit in my head because if I think about it, I don't really think about the big winning trades anymore. I don't think that for me, the huge winning trades aren't noteworthy. The ones that you guys hear me talk about more often are the losers, right? I think that's more important. The losing trades are the ones that I learn from and try to avoid making those mistakes. So, man, I can run you through a lot of my big losing trades. They're much more memorable to me, whereas the winning trades, it really is just doing what I was supposed to do, follow the trend, follow the plan, and, it was boring stuff. So that was answer number 2. All right. And that question by Bob led to this one. He says, I asked because since last year, I'm long Boeing from 100, Disney from 95, Facebook from 170, and a few others that seem to be leveling off. So I don't know if I just keep going until the trail stop kicks me out and keep selling calls against them, or just close them and use the capital in better areas of growth. I actually really like your approach here. I think what you're doing is, if you look at the numbers, you're obviously up big. So let me bring up some charts here. I'll bring up Disney on the side over here, and I'll show you guys that screen. So there's my charts, and he says from last year, I'll put a line across where, let me get rid of some of these horizontal lines, but I'll put lines on where Bob is long from. By the way, if you're looking at Disney, you are forming a head and shoulders pattern. So that one, from all of them, that one I might think about maybe sucking up my profits, move my stop losses up a little bit. It's definitely been drifting down. But if you're long from where that line is, howdy doody, man. You're up 73%. This is awesome. I mean, how can you be unhappy with that one? Now, Facebook, FB. This one you're doing even better in 170. Goodness gracious, my friend. You're loving it. You're going to have to pay some serious capital gains, but that's a good problem to have. Here you look at that Facebook chart. It's currently trading at 351, down 1% today after that monstrous day yesterday. You're up over, so let's see. If I went 170 to 170, you're up 100%, over 100% on this one. Great. Boeing. All right. Boeing looks the weakest of them all, just because it's not an aggressive move to the upside, but your entry price is still incredible, right? If you look at when you bought this thing, you said you're long Boeing from 100, and I actually need to change something because you're long Disney at 95. Talk about picking the bottoms, Bob. Great. Awesome. Gregory, I do engage with my audience a lot. I love engaging with my audience, especially when it's on point. And most of the time, you send in stuff that has nothing to do with what we're talking about in any way, shape, or form on the show. So if you want to engage, feel free to engage with us. I love talking to my audience, and they know it. So let's see. Okay, so your question, Bob, what should you be doing? I think what you're doing is exactly what you should be doing. What you're doing is you are moving your trailing stop up, protecting your downside, and selling covered calls. I think that's the best thing you could be doing. I wouldn't take money out of it because, remember, the trend right now is still to the upside on almost all of these. I mean, here is your Boeing. Even though it looks weak right now, it's trending to the upside. Now, we did today break below a most recent low, but I wouldn't call that any really sort of trend break. Maybe if you got down below 219 as a potential trend break here. But move your trailing stop up, sell those calls. Where do you sell your calls at? 260, 280? I mean, collect that premium, and I think you'll continue to do great with that Boeing. The only thing that you have to worry about here is a super sharp move to the downside, which your stop loss will take you out, or you get like you did back here in June, which is a monster move up that all of a sudden goes above your strike price that you sold your call at, and you're just wishing that you would have sold a higher price strike. So that's the worst that could happen here. So I think you're in a great position, Bob. Disney. Now let me change the number because I said 100. You actually told me 95. Boom. So there's your 95. Same thing on this one. Although if you notice what's happening on Disney since early March, you're on a downtrend right now. You're drifting lower and lower and lower. We've come back down towards this neckline, which, God, it's really tricky to say exactly where this neckline is. It kind of moves around. But, in that 160 area, that to me would be your line in the sand. But if you got a trailing stop, move that trailing stop up, tighten it up. I would move my trailing stop tighter on Disney than I would with the other ones because the other ones are still trending to the upside. In this case, still sell those covered calls, right? Maybe you sell the 190 strike price. Really, really up to you what strike price specifically you want to sell it at. But all you're doing by selling those covered calls, for those that might not know, is he owns the stock. We're looking at Disney. He owns it at 95. That's his cost basis. If he sells a call and he collects $1 premium, let's say right now it's at $173, and he sells a premium for, let's call it 185. That means if it moves up $12 from here or more, he'll have to get rid of his shares. But let's say he collects $1 for that. That means now his cost basis is 94. And you do that month after month after month after month. All you're doing is lowering your cost basis and just making this trade even sweeter. So, Bob, I think personally I'd say you're doing the absolute right thing. This is the best solution. If you get to that point where you're like, I'm fearful, I'm really nervous about what's going on with the equity markets, then yeah, you could just go to cash and sell out of these things and maybe move for something else. But, the old phrase says, if it ain't broke, don't fix it. And right now, I think you're in a situation where the only one of these two, Facebook or Disney, that looks broken is Disney. I think Boeing still has a decent uptrend, granted not as aggressive. Facebook, with all the news happening yesterday, this may be an example of buy the rumor, sell the news, right? It could be that example, but just keep those trail stops moving tighter and tighter. Worst case, you get taken out and you got to pay some ungodly capital gains. But you know what? I think that's all in all a great position to be in. So, Bob, thanks for those questions. I love it. Now let me go to chat here because I want to make sure again. Merlin, that is when they fired you at CNBC's guys. Well, they didn't fire me. I was never employed. Most of those people come on as guests to promote their wares. But it was kind of interesting. Yes, January 2018 was a CNBC broadcast where basically we talked about the equity markets. I said break out. If we break 1260, break out the bulldozers. We're going down in a big way. And then we talked about gold and then said we're going to a commercial break. I was supposed to come back for a whole nother segment. And in my earpiece, they're like, you're done. I was like, well, I have another. You're done. And I couldn't figure out why on earth. I thought it went pretty well. I thought we did a great segment. It was engaging. There was all kinds of grid analysis. They didn't know I could draw with the tools, so it was kind of fun to actually do the drawings there for them. So I thought we'd do great. In hindsight, I come to find out that, did you guys know who used to own CNBC? Type it in the chat if you guys know who I don't know if they still own it, but who used to own CNBC. It was owned by a pretty big company. A hint, they're, I think, going to do a split here soon. They were owned by GE, which I thought was interesting. What I should have said, guys, market's going to go to hell in a handbasket, 1260, short the markets, blah, blah, but make sure you buy GE. GE is the best company you should buy. I think what happened is that period of time in 2007 and 8, they didn't want bearish commentators talking about the markets. It was buy. So I think it was frowned upon back then to talk about bearishness or shorting the market. Now I think it's okay. I believe it's somewhat commonplace. But anyway, let's see. What else do I got? Well, usually, Gregory, we don't talk about the Brazilian ETFs, but I mean, always happy to if to look at these types of things. Oh gosh, here's why. Oh goodness. So, you should watch the show more often, Gregory, because trading something like BRZU, you're a triple bullish ETF. So the triple leverage stuff is a very easy way to lose all your money, bullish or bearish. You get on the wrong side of these things, it could be toast. That was probably bad part number one. Number two, you said you lost all your money. You shouldn't have put all your money in that bad boy. This is where hedging and spreading your money around is key, especially when you're trading a triple leverage ETF. You're swinging for the fences, which is one of those things that will prevent you from making this as a long-term profession. Yep, I didn't see the numbers on this show, on the order, but yeah, I heard they got a big order today. I don't think you have a trailing stop on a covered call. Really, Tom? That I don't know. If you can. I'll have to check on that one, Tom. You might be right. Because your covered call locks up those shares, right? That's a good question. I'm not 100% sure on that one. Good news, I'm trying to get Corey Lane back on the show. I'm also trying to get Corey Lane and Tim Blotzer on so I can get his options questions answered, which maybe I'll be able to answer that one as well. I'll have to put that one down on the list here, but good call, Tom. Today's a good day for Boeing. Sold 250 planes. Yeah, I mean, if the chart of Boeing, though, I'm bullish on the airline sector now. It wasn't obviously last year because I feel like we're coming out of COVID. And it's interesting, if you look at the price chart, down 1.6% today on Boeing, you would have thought that this would have been a bigger pop up for Boeing based off of such a huge order. But unfortunately, it didn't. So we'll have to wait and see here. But all in all, I still think Boeing is okay long term. Just keep moving them trailing stops up. All right, let's see. What else do I got? Saving the truth is treason. Well, look, unfortunately, it's one that's gotten me in trouble. It's gotten me in trouble is speaking the truth many times. A lot of people want to be, hear what they want to hear. Any thoughts on SafeMoon bridging to their own other block gains with their token? So for SafeMoon, which is ironic that it was a cryptocurrency that was designed to be the safest stablecoin, got hacked and they lost a bunch of funds there. So I won't be touching that one for quite some time until they figure out what the kinks were. Obviously, you have a smart contract that was written improperly and it had a hole that was exploited by somebody and that money taken out. So not something that makes me feel very comfortable. And it's funny because the irony is called SafeMoon. Went to zero, right? Yeah, SafeMoon went to zero. So I'm not following at least the dev side, Trevor. I'm not looking at what the devs are doing, but I don't know. I'm not comfortable with SafeMoon at this point, just because if you have a smart contract that got exploited like that, clearly there were vulnerabilities which should have been audited before that contract went live, especially something that could be potentially that big. Really dangerous and foolish of them anyway. If you get stopped out, you're naked on the call. Correct. And I guess if your account is enabled for that, that would be okay to have a naked call, but that's going to be level 5. What else we got? Do you have time to look at FCX? Yeah, I got 3 minutes. FCX. All right, so Freeport McMoran. Great chart, looking good, big pullback, potential bounce here. Katut says, I sold put at 36, expires Friday. I want to own it. Well, by Friday? Well, I don't know if you're going to own it. I mean, you're on a little bit of a bounce up right now, right? You've had this nice sell-off from 45 down to, call it 34, bounce back all the way up to roughly 38. Now you're at 37, so you got to get down to this 36 or lower to be exercised if you sold that put. Not sure that you're going to get it. I mean, it really depends on what happens over the next few days. Certainly the swings, if you look at the ATR on this, it's going to be slowing down, but there's still some volatility in this bad boy. Let's go to daily ATR. You're moving $1.59 a day, so yeah, definitely potential to be hit. As far as trend, though, this looks to me like I feel like it wants to be moving back up here, so you may not get that. Unfortunately, we don't really know what we don't really know which way this thing's going to go, and unfortunately, you've got a small window of time to get executed on. But all in all, I like it. Hopefully collected enough premium. You sold pretty close to the current strike price, so I'm assuming you got some decent premium on that one as well. Okay, you talked about splitting stocks. What about dividends? They split too. I don't know, Tibor. I'm not a dividend guy at all. But to me, dividends are a waste of time, personally. Dividends, if you're shooting for dividends, then I think you can make a lot more money off the underlying price of a security. So unfortunately, don't know that one. Too bad. Man, I was trying to rush and get through all this stuff. I think I actually got through almost everything I needed to get through for today. I think pretty damn good. One thing that's noteworthy, let me bring up Forex Factory here. Really interesting today with regards to the Case-Shiller Composite 20 Home Price Index. You guys might remember we talked about that being an important factor for the housing market, and the previous numbers were like 13.4, 13.5%, and I thought, man, you look at year over year on that, that's a pretty incredible increase. It came out much higher than expected today. This is, you're seeing a housing market that's really heating up. Here is your economic calendar for today, and I'll highlight for you the one that I think is noteworthy, and that's this bad boy right here, kind of in this, I guess it's green line right now. Notice that they're expecting it to go from 13.4 to 14.8. They came out at 14.9, which not only is it moving up, it's moving up at a much greater clip than expected, and here's why I'm concerned. There's your chart of home prices since COVID, a few months after COVID started, really September is where housing prices went absolutely apeshit. And I'll zoom even further out here. Notice it's the highest level we've seen in 15 years. So it's not that it's the end of the road. It's just saying when things get overly heated like this, it should be a warning sign. And I really wish I could get back here into 2005 because that's really where you had the big surge last time. So to me, this is noteworthy and should be concerning for everybody, at least that it's growing that aggressively, because as we've all seen, when something moves this aggressively, there usually is a rip the other way. Whether it's ripping up, it's going to go down, or ripping down, and it's going to rip back up. So, dangerous spot to be in. Now for tomorrow, I'll just bring up the calendar here just so I can, since I didn't have time to prepare anything. This is what we've got cooking for tomorrow. Again, there's more housing data. Pending home sales down here. This is really the important stuff is down near the bottom, which is 7 a.m. tomorrow, pending home sales. You also have PMI numbers coming out for Chicago, crude oil inventories as well, which is noteworthy given how volatile oil has been over the past couple days. I say that almost tongue-in-cheek because oil's been kind of flat, not really doing massive swings. Otherwise, economic data you see here, not a lot of really monumental moving market stuff. So I'm not too concerned about what's going on that economic announcement day for tomorrow. You know, there is the Tenkan Manufacturing Index, which a lot of people who are trading the yen look at this. So if you're trading in Japan's markets, these are some other factors for you. And finally, tomorrow night you have retail sales coming out for, where's that? Germany. You got the European Union, Germany reporting retail sales tomorrow, which notice the swing. Previous month was 5.5. They're expecting to go from negative 5.5 to a positive 4.5. That's a 10% swing. Gotta love that if they come out and meet those numbers. All right, for tomorrow's earnings, I don't have the picture here, but you have Constellation Brands, you've got Micron, General Mills as well. So those are three major companies reporting earnings tomorrow. I'm trying to get my screen back up with all your chat since I just closed it all out. There it is. And I think that actually gets me I'm 2 minutes over time. Perfect. All right, you can make more money out of a CD. Well, yeah, on dividends wise, yeah, possibly. And Gregory says, good question here, Gregory. You finally got a good comment in, Gregory. He says, why should I pay rent? I'm just going to hide my, I don't know what that is, right here and pretend to be poor. Look, why should you rent? Because, well, I think it's two things. If you position it correctly, you could buy a home and rent that home out and let somebody pay your mortgage on that home while you're renting out something smaller. Because for most of us, do I need to have a 3,000 square foot home if I live by myself? Probably not. So maybe I can rent that home out to a family that's going to not only pay my mortgage, but also give me positive cash flow that will pay for my rental. So now all of a sudden I have my own home building equity. Someone's paying all of it for me, and I can rent out. A lot of people are doing this. They own a home, but they're also renting that out and going and renting a place on their own, and having that person rent out their home and pay all the mortgage, property taxes, insurance, and give them positive cash flow. So that's one of the reasons why. So pay rent. It all depends on your business plan and how you want to approach it. All right, yes. No vacations coming up here. I will be going to see Fish. I finally got tickets to go see Fish, but that's it. All right, I got to go get ready for this thing for Seattle. If any of you are going to be in that workshop tonight and you're in this Pacific Northwest, awesome. Anyway, thank you guys for joining us today. Sorry it was so scattered and random. I know A. Also Hart came back to Irvine today, so we had a little welcome back party for him and just kind of talked about Online Trading Academy and where we're headed. And so we're pretty excited about that. I'm really excited to get that company back on track and once back to the heyday that we once had. A lot of opportunity there and a lot of great students. And again, we did that presentation on Saturday. It was so great to be face-to-face. A lot of these centers are now face-to-face and live student interaction, which is where I think Online Trading Academy separates himself from just about everybody else. Anyway, Brandon Wendell will be our guest for tomorrow's show. And yes, Chris, he says, I'm still working on some questions. Cool. I hope that you're enjoying it, Chris, and you're learning some stuff. And as I told your brother, make sure you, if you have questions, just send them on in. One thing that you got to remember, there is no such thing as a stupid question. A I'd rather somebody ask what they feel is a stupid question than try to correct a stupid mistake. Questions are free. Mistakes cost a lot of money. So hopefully you get some good questions in. All right, guys, that's going to do it for me. If you have something you want me to discuss with Brandon Wendell, we're going to keep it pretty much futures-based tomorrow. So we'll probably talk about S&Ps, indexes. If you follow his Twitter feed, which is at TraderBdub, he's been doing a lot more commentary on Bitcoin. I think we might have converted Mr. Wendell over to the crypto space. So we'll talk about whatever you guys want to talk about with regards to futures on tomorrow. You can email me at TraderMerlin@gmail.com. Hit that like button, hit that subscribe button. Until then, happy trading. I'll see you tomorrow, guys.